Well, hello everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and with me today is Scott Redler. Thanks so much for being here today, Scott.
Thanks for having me. It is,
Oh,
what is it, Wednesday, August 16th?
Wednesday, August 16th. Yes. All right. So for everyone who is here with us and has been here before, you know this, but for everyone who is new, this is a Q&A event between not only myself and Scott, but also yourself and Scott. So please be sure to submit questions in the live chat. I'm going to leave a comment in the chat now so you guys can see where that is at. There we go. All right. So as those questions come up, just go ahead and submit them, and I will get to all of them in the second half of this event. So just let them pile up, and we will ask Scott all of them. Okay, Scott, so you've been here before. You know my first question. How would you grade your week of trading so far on your typical school grading scale? An A, passing, or, wonderfully passing, to an F, failing.
Oh, well, we were just talking about, I just gave you some charts. I would think if you could put up a just chart of the Qs,
Sure.
put a chart of the Qs up so everyone could see it, and then I'll rate myself because on July 19th, I came out, I was on Fox Business with Liz Clayman. I'm like, I think that was a summer top. It feels like all of the great stocks that were leading the tech sector all topped out prior to numbers. They all gapped down post numbers, and we have no leadership. And I would think that that's a spot. The Nasdaq's up 40% or so. And I do think in the first part of that move, I did a decent job reducing risk because I was really massaging positions for much of the second quarter and had a really good second quarter, had a really good July. And from there, the first part of the corrective phase felt easy. And then I do think in the last week, I've tested levels and it's been trickier. And I feel like, even calling the top, it's been hard. So for traders, like, you make a call, you think everyone makes gazillions of dollars off the call. It's how you manage it and how you trade it. And listen, I've had 10 to 15 stocks on average for the most of the second quarter. I've tested levels here and this and that. And instead of just shorting every rally, because I called the summer top, I've been trying to buy dips. And then when it looks like we might get a little bit more of a push, we've failed. And I've given back some money this week. So I would give myself probably a C plus.
All right. So solidly passing, but not an excellent grade. But would you say you're still following your strategies, following your plan like you're supposed to, even if maybe you're losing money along the way?
Yeah, like I sometimes feel like, I have a lot of different hats. I'm the chief strategic officer, I'm founding partner, but I do get paid quarterly based on my performance. And sometimes I write better than I trade. A lot of people like me because I write and I give active approaches to 40 different stocks, but I also put stuff in the media and then I also trade for a living. And I feel like sometimes, I haven't followed my own thought process and got impulsive and I baited myself in. And instead of, again, shorting rallies for lower prices that I've targeted, I've tried to play cute bounces, and the cute bounces that have made a little bit of money turn into a loss if you stay with them too long. So I will say I follow my process where, again, I'm not in 15 stocks and, Tesla's 20% off the highs. I've played it twice. It's weak. I'm out of the way. I made a lot of money long during that active sequence. Apple's down 10% plus. I'm not sitting in it. I'm not breaking any rules, but I'm a little bit better at buying dips and playing levels versus selling into resistance and pressing through prior lows. So I have to just get better at that. So until I do, it'll be harder for me to take advantage of these corrective phases. But what I don't want to do is get hurt. I don't want to give too much money back. So when we do find an area that's compelling and conducive, I can start to, press the envelope or, or put more equity risk on when the time is right. It's just we're still in a discovery phase, and we have no idea exactly where that is yet.
All right, so let's get to this week's news focused on the consumer and retailers. We got the retail sales report yesterday, and then lots of big retail earnings have already come out. We've got results from Home Depot, Target, TJX companies today. What have these results so far signaled to you about the strength of the U.S. consumer?
Well, that's been the Goldilocks story for the active bulls, is that, that rates have been raised for, I don't even know, for 7 months plus. And, unemployment is still low. And and the consumer is still strong, even with credit card interest rates higher, and buying houses are tough. 30-year mortgages are 7% plus, and all of a sudden, a lot of these retailers are still saying that the consumer is still pretty resilient. So it's giving the proof or a little support that we're in this kind of soft landing-ish approach until we're not. How long is it going to take for all these higher interest rates to filter through the economy to start slowing things down, where all of a sudden all the recession talk happens, and then everyone says the S&P valuation is way too high for a recession. So the push-pull of normalization, soft landing, and hard landing is still juggling. And every time you're in a little bit of a corrective phase, like we've been since July 19th in tech and the end of July in the S&P, the macro ghosts of what's happening to the consumer and the economy starts getting louder because price is getting more negative. So it kind of like, it fuels each other. So for me, I would think, inflation is still here. The consumer is probably starting to think about their savings account if they've been using a bunch of it, trying to like travel because they couldn't travel during COVID, buy themselves a few things because they've had a bit more money from whatever the stimulus checks were, which I think are all gone. So I do think that watching the consumer is key. And Walmart had a sick move into earnings. I would not be long that. And even Target, that has been left for dead, came out with a solid report. I had options calls into it, and still was hard to make money as the strength was sold. So ultimately, these retail stocks are not active places to be long, and it's a little testy, but you should still watch to see like what is happening with the consumer, as it feels like they're getting a little strained, but not really like falling by the wayside yet.
An interesting trend that's kind of emerging. Let's talk about TJX Companies, which is the parent of three discount retailers: TJ Maxx, Marshalls, Home Goods. Their report cited strong customer growth. Target, though, saying that they're kind of seeing their shoppers pull back on discretionary spending. So you're seeing kind of a shift in consumers going to these more discount retailers versus your traditional retailers, because they still want to buy things, but they need to buy things cheaper. So what does that signal? Does this signal anything to you, rather, about a shift in consumer activity?
Well, like some of the froth, is getting wrung out. So
Mm-hmm.
people are being more selective. That's probably good. A year or two ago, maybe everyone's like, "Oh, I'm just going to spend this on that and not care."
Mm-hmm.
Now, some are saying, "Hey, things are expensive. Inflation is still here. My saving is dwindling versus the amount that I'm making. So let's start to be a little bit more careful on what we're spending on. What items are there?" So there is a shift probably in big ticket items versus necessity items versus what do we want. So I do think that into this spot, people are just getting a little bit more selective on what they want to spend. So same way stock selection right now in the market has been really key the last 2 to 3 weeks. On the same thing, the consumers just being more selective on where they're spending money, because they don't want to start depleting if for some reason the higher rates really starts to filter into the economy, which hasn't exactly happened yet.
You mentioned your calls on Target. So talk about your strategy heading into that earnings report and how it did or did not work for you today.
Well, the problem is I wanted to take an earnings play for Target, and I started about a week and a half ago.
Mm-hmm.
And in the last week and a half, the stock just went lower.
Right.
And so my strikes that I chose were too high. So this morning when Target was up $10, $12, I was like, oh my God, Target's great. Unless you bought it yesterday, which probably is a better way to play an earnings play. Sometimes I play for a pre-earnings move to the upside. Instead, it was a pre-earnings move to the downside. So
Mm-hmm.
what I did though pretty fast is, I did sell my Target calls. They were still lower from where I bought them, but there was like 75 cents in premium, just because I'm like, I don't think it gets there. So I salvaged money, did what I could. I could have
Right.
bought more yesterday, or I could have just waited, until the day before, which is usually how I trade binary events, because earnings to me are binary events, and I like to play them
Right.
options because risk is premium paid.
Mm-hmm.
Instead, I started too early, and it was too far out of the money by the time it went up 10 or percent and still lost long.
Hmm. So you mentioned Target had that big move to the downside heading into this report. Walmart, on the other hand, has had a much larger move to the upside. So after Target's report today, what are you anticipating for Walmart tomorrow morning? They report ahead of the open.
Well, it's been more of the chosen retailer. I would think that it's going
Mm-hmm.
to really have to be fantastic to go up anymore. Like Target, from where it was good enough to go,
Right.
and Target at the 2023 low is not enough to hold the post earnings strength. I'm just saying to me, I don't think the risk reward of taking Walmart into the print tomorrow for an active trader makes any sense. Doesn't mean you
Hmm.
could blindly short it or buy puts, but I just don't think it's just a good setup to be long. And we'll see
Yeah.
where it is tomorrow, and then we'll judge the action there after the first 15, 30 minutes of it.
What's been your your big takeaway from this earnings season? You mentioned how Walmart is up so much. There's really not that much room for much more, even unless it's some kind of blowout report. And we've seen lots of stocks beat but fall, or miss but rise. It's been kind of a interesting earnings season. So, kind of, what's been your reaction to how the market has reacted to the reports that have come out so far?
Well, the earnings season kind of gave me the conviction to on July 19th to say I think the Qs and tech is in a summer top.
Mm,
Apple rallied to 198 plus before the earnings print, so it made no sense taking it into it, and it's been on the decline since. Right,
mm,
Microsoft made also an all-time high, and the print wasn't enough, so it showed that the street was just a little too giddy prior, meaning it's time for a corrective digestive phase. Then you
mm,
had Meta also put its high in prior to the earnings print. Netflix high in prior to the earnings print. But what's good about that, which is why it's such a good July, is that you could have been long based on the trend, not worried about what it would do post earnings. So they gave you the move
right.
prior, and then it discounted it thereafter.
Mm,
And now you have Amazon and Google, which have been trying to act better post earnings because they didn't rally as much into the print, and now because of the market weakness, they're just drifting lower. So as an active trader, it's like, okay, I don't need to be sitting
mm,
in these things. I'll wait till we get clues that finally we hit a pivot low that could start a new active sequence long, and those might be the ones to go to. But you better not just sit in there and hold your breath and go underwater if you're looking for a paycheck in the end of August, because that might not be till mid-September.
mm. Every single piece of data that we get about consumers and the economy comes against the backdrop of the upcoming September 20th Fed meeting. CME Group's FedWatch tool still shows over 88% of traders are anticipating no rate hike a month from now. How are you feeling about the next meeting?
Well, it all depends on, like, people say the Fed doesn't watch the market, but I think it does.
Mm,
If we were at 4,600 or higher, coming into September, I would think that they'd be comfortable with another rate hike. If right now, we've pulled 4% in the S&P off the highs, if for the next 2, 3 weeks, we tend to trend lower and get towards the
mm,
200-day, towards 4,300 in the S&P, or 4,200. I don't think there's any shot that they're going to raise rates again. They're probably going to leave it. Um, I do think they're going to stay higher for longer because inflation does feel very sticky. Gas prices are sticky, food prices are sticky, traveling
mhm.
is sticky. You're having these, if you've been watching, which I'm sure you have, Greta, these negotiations with the unions on salary. Like the
Yeah,
UPS just cut a deal where if you've been working there for 6 years, you can make $175,000. That's a lot of money,
yeah,
right? Been there for 6 years, 175, not so bad. Driving a truck around, not saying this, it's an easy job. Now you're talking about
right.
the UAW, which is for GM and for Ford. So they're trying to
Hmm.
get more money. So what do you think happens to all the teachers, that are teaching a class of 30 kids, making $80,000 or $90,000 after 5 years? You don't think they're going to want $1.25, $1.50? What does that do? It raises and keeps inflation sticky and makes money worth less. So I think the Fed has to stay prudent and stay the course, and there's no reason to cut, in the next year or so, because money's too easy and cheap.
Uh, The Fed did release the minutes of their July meeting today, and that showed uncertainty about future policy. They can't, really, they're not
Cheers.
sure if they're going to raise rates again or not, and also showed that officials are worried about inflation still, and like you mentioned, inflation being sticky. What was your takeaway from that readout from the central bank today?
Well, I don't want to reiterate it because I kind of just pre thought, said what I think they're just higher for longer.
Yeah.
Maybe there's a quarter
Okay.
left, a half left, but they're in no rush to lower rates unless things fell off a cliff. And if things fell
Hmm.
off a cliff, that means the S&P, that's down 4%, will be down 15%, come the fall, and that's when they start cutting. A lot of people saying, oh, they're going to cut rates in the second quarter in 2024. That means the market is in a corrective phase. It's going further and longer. But if we stay the course the way we've been trading for the past 7 months before August, chances are, there's no rate cuts, and they want things to slow down. The question is, can we, do the push pull where we get the normalization, which we feel like we're normalized, but can it stay that way, which is what we're trying to look at with the consumer, and we're trying to look at with the data, with the consumer price index, the PPI, and retail sales. And as of now, it feels like the consumer is still strong, unemployment is still low. Will
Hmm.
that be the same thing in 6 months from now? 6 months from now, we'll have a little bit more data and more clues. But for now, it's been pretty status quo, where S&P was up 19%, we're up 15%, and the Fed doesn't have to do anything too drastic.
Hmm. Regional banks were under a lot of pressure earlier this year. Now they're back under pressure this week after comments from the Minneapolis Fed president. Neil Kashkari said on Tuesday that he would like to go significantly further than the recent proposals to set higher capital requirements for banks with more than 100 billion in assets. So he says, the proposals aren't enough. He wants more. Do you think that regional banks do need further regulation?
Well, yeah, I'm not a regulation guy, I'll be honest, but a
Mm-hmm.
lot of the regional banks blew up because they tried to figure out ways to make money with customer deposits and over leverage themselves doing different things. And when
Mm-hmm.
rates exploded, they all started to blow up if they were over leveraged. So you can't
Mm-hmm.
do that. And
Right.
so, maybe they need to have different types of criteria on what they're allowed and not allowed to do. The KRE is still below the 200-day. The KRE had a broken bounce. I personally think it's still in a void, and it could be a potential problem. And the regional banks don't like higher rates because they bet against the extreme of higher rates. But chances are we're not going to be able to be up here, and sustain the higher rates. So I don't foresee so many new bankruptcies
Mm-hmm.
like we've seen. But
Right.
I still think it's a wait and see. And if rates stay here and go a little higher, there might be a few more blowups than only the 3 to 5 that we've seen. Considering I think there's like 4,500 regional banks out there.
Mm. Fitch Ratings making news again this week after their surprise downgrade of the U.S. economy earlier this month. Fitch warning now that they may be forced to downgrade dozens of banks, and that includes the biggest banks in the U.S., J.P. Morgan, Bank of America, Citigroup. So not just your regional banks, but your big banks. Do you see that as any real concern for that sector?
Yeah, a little bit concerned. Yeah,
Mm-hmm.
I feel like a lot of people poo-pooed when they brought the debt rating down of the United States like three
Mm-hmm.
weeks ago. That helped give the bears some narrative and sink their teeth into this corrective phase. Bottom line
Mm-hmm.
is, the deficit is through the roof. Washington, to me, is very irresponsible. I can't believe we have two guys that are 70 plus that are going to be running for president potentially. I'd rather them both not and get a moderate in the middle, but we're not going to talk politics. But that's pretty hard to believe. In the United States, that's what we have to run for president. On
Yeah.
both the Republican and Democrat side, really. I guess we get we get the Washington we elect, so or that we deserve, and some of these rating agencies are starting to say, hey, we have some top level risk up here. But
Mm-hmm.
anyway, as far as the big banks, I think J.P. Morgan runs themselves very well. I love Jamie Dimon. I wish he would run for president. But again, when things get extreme, things get stressed. So
Mm-hmm.
the rating agencies trying to do a little checks and balances here. I don't think it's a bad thing. And but will it turn into 2007, 2008? Probably not, because I think the agencies have done a good job making sure that when you buy a house, you need to put 20% down, and you can't
Yeah.
have five of them in 2007. It's just the banks aren't the place to be right now for alpha. They're just a trade, or they're just in a void until we get through the next perhaps phase 3, 6, 9 months.
Hmm. All right. So for the market as a whole, what are the key levels that you're monitoring at this point?
Well, we kind of came just down to one of them.
Mm-hmm.
Today, like we broke the lows of 2000, of not 2023, but of August.
Mm-hmm.
We've been down for, kind of like stair stepping lower. So I
Mm-hmm.
do think, if you post a chart up of the spies on the daily chart that I sent you
Yep.
over before,
Yep. What's up?
the spies did break. Um, the 442.30, which was a level that I was watching that it broke today to give some more downside. It tried to hold it and play with it. And then the Fed minutes basically said, higher for longer, not in the mid. So either which way, the 100-day is at 431. If you look at that, that's that little yellow line. That's 4,300-ish on the S&P cash. It's 431 on the spies. 431 from 459, which is the top. If you look at it on July 27th, that might be a good spot. Hopefully we get there and there's a trade there. I think overall S&P does not break 4,200 in the fall. That would be a spot that I would be like, wow, we should hold there, put some, alpha money to work. Like I have a blood in the street account, which is my wife's cash account that I put to work many times. If you put a chart up of the S&P of the monthly, you
Yep.
will see in those yellow
Oh,
areas, we
hold
had
on.
the
I gotta
taper
find it.
tantrum of 2018 and then the decline of the pandemic and then even the decline from 2021. Every time the S&P went down over 10%, I started to leg in her cash account. So people are like, hey, dog, when are you going to put the blood in the street account to work? We had a tough August. I'm like, a tough August? We're up 19%. We're only up 15% now. I'm not going to start putting it in here, but I would think of like 4,300. I would put a quarter of it in 4,200. I mean, 4,300, I'm sorry. And then a 4,200, I would get bigger depending on where the calendar is too. If it's like, mid-October when usually the market tries to bottom, that would be a spot. But right here, we're oversold. The oscillator is minus 70, so it means it's hard to be short. Usually the oscillator gets oversold to minus 40. But today you tried being long, you couldn't blindly do it because every bounce was sold and we closed weak. So you have to wait for a little bit more market discovery.
Hmm. How would you describe the current market sentiment and action?
Well, the sentiment's finally like we hit the top once Mike Wilson of Morgan Stanley finally capitulated and said he was wrong. A lot of market
Mm-hmm.
bears said they were wrong. A lot of different wirehouses said, "Oh, I don't see a recession," and that was when we were up 20% in the S&P, 40% in
Mm-hmm.
the Nasdaq, and then we peaked on July 19th and July 27th. Now people are starting to get negative. People are starting to focus more on the macro, which could be China not doing great. It could be rates higher for longer. It could be valuations. So price helps dictate sentiment. So at some
Mm-hmm.
point, it will get to a price in an equilibrium where we'll want to buy. We just haven't got there yet, considering it's August 18th, and we could be going into this for the next 2, 4, 5, 6 weeks. But at this point, we're very short term oversold, but midterm, it feels like we're not at a low that we could put sink our teeth into for an active sequence that can carry us for more than a day and a quarter, which is what the bounces have been recently.
Yeah. Uh, let's go to a couple audience questions. Yari asked, or he said, trucking slash freight has been in a recession for quite a while. By his LinkedIn profile, I can tell he's in the industry. So, what do you think about that?
It's not my specialty, but I would say if freight is in a recession, that means there's not a lot of, trucks moving product. So if there's not a
Mm-hmm.
lot of demand for that, rates go down. So that means things are starting to slow. And that's part of the whole, situation is are people looking for, things falling off a cliff, which they haven't yet, but everyone's looking for signs from lumber, from freight, from this, from that, on whether or not the 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 interest rates that have been raised for so long are starting to infiltrate into the economy to cause a slowdown. So that could be a clue that things are starting to slow. The question is how much and how far down will they go?
Shashi wants you to discuss Meta for the short term.
Meta, listen,
Mm-hmm.
it did one of those pre-earnings highs and it's been trickling lower. I think tomorrow could be an interesting day. I trade Meta all the time, and Meta
Mm-hmm.
closed around 294. I would think tomorrow around 291ish, if it sees it, there could be an actionable short-term trade. Does that mean it's the bottom for, August, September? I don't know, but I would think it's getting close to the 50-day, and that would be a spot if you could see it in the next day or so for some kind of play to, at 310, I was saying you should be shorting it when it broke that tight pattern, and now I
Mm-hmm.
would have covered already if you were shorted in and look to be long somewhere between 290, 292 for an active trade. But then, we'll have to measure the market because nothing's going to hold up and bounce with ferocity if, we're heading down to 4,300 or lower over the next 2 to 4 weeks. But short term, that could give clues on a little bit of an oversold bounce.
Hmm. I know the overall market environment for you right now is more bearish. You've mentioned you called that summer top back in July, but what stocks would you say you are bullish on right now and why?
I've tried to be
If
bullish on
there's
some of.
none, then there's none, but
Listen, sometimes I'm bullish on cash. Cash is a position.
hmm.
At this point, the outside is minus 70, so it's not the best time to be short. The best time to be short was when I did call the summer top, or when the Qs broke 380. Now we are trickling lower, and even though shorts are working, it's making it hard that at one point it might turn and squeeze them. So at this point, it's hard to be short, and we haven't found the bottom yet. So that means pull back and take little trades. Like today, some people made money long buying the first 20 minutes, and some people made money shorting after 45 minutes. But if you
Hmm.
bought the first 20 minutes and bought a pullback, you lost what you made, and you probably lost even more. So it's what I call tactical. This is a tactical market right now until I see more data. If you're active, if you're long term, put your money in every single month, do not withdraw. And if we do wind up going down more intensely, maybe if you have extra cash, you throw it in. That's how you make alpha. And then maybe we use our blood on the street account, but this is not the level for that.
What would you say, what would be your advice for a trader who, got used to the market that always goes up, or the market earlier this year or last year that was easier to short? Now that you're in this market that's kind of hard to play long and kind of hard to short all at the same time, what would your advice be for that trader?
Get a hobby. Low gross, low net. Don't put too
Hmm.
much behind the long or short. Let things figure out. Hands off the keys. Like into October, every rally was sold. Everyone was so bearish. Then from October up until July 19th, most dips were bought. Some pull-ins were bigger than others. Now we're in, okay, what does this mean? Where do we go next? Nobody truly knows. So we're in a price discovery spot. So that
Hmm.
means take trades, net money, do less, no things in no man's land, only compelling price spots, and just know that sometimes there's no muscle memory from one day to the next or from 1 hour to the next. So it's the point where you don't want to lose, and if
Hmm.
you make, protect it.
On your positions disclosure right now, most of your positions are are options, not equities. Are you using options more actively in the current market action that we're seeing?
Yeah, it's a good gauge to know what I'm thinking, because like a month ago or 6 weeks ago, I had 12 active equity longs and less options. Now I
Mm-hmm.
have some options just in case things do certain things, but I know my risk is defined. You know,
Mm-hmm.
some things are left over from a few months ago where I took profits on, and now, they're losers. But usually when
Mm-hmm.
you see me in no equity positions, it's saying that I'm just hands off because it's hard to tell. If you see me in an option in the stock, usually that means my concept might turn into an active trade because the market's shown me that it is. So as of right now, I'm trying to position in a few things, maybe for this Friday, or for when I'm leaving for Spain on Monday, maybe for next week. But really, I'm just very low gross, low net. I have a lot of buying power, and I'm sitting in probably 95% cash, and I'm waiting to start to put money to work in an active sequence that could last for more than a day or so. Like, yes, not yesterday, the day before yesterday, it looked like we were going to break the downtrend. If you post a chart of the spies, and all of a sudden, Monday looked
Mm-hmm.
like we had a great trade, which we did. I made a lot of money Monday. Nvidia had a
Mm-hmm.
blast off. lots of stocks did red dog reversals. I had 5 longs on besides my options. And by Tuesday, most lows were taken out from the prior take. Things gave back more than 50% of the retracement. And I got stopped out and I lost half of what I made Monday. But if I would have just stayed the course and bought more, I'd be down a lot more coming into the end of the day today. So like you said before, Greta, like I followed my process. I tried a few things and, had a few paper cuts, but nothing dramatic. No, no arteries severed. Just little pricks, which get annoying because when a lot of them happen, all of a sudden it's like, can't touch anything.
Yeah. How important is it in this type of market environment for traders to have that solid strategy, that solid plan that you're following day in and day out, even if it's not, uh, gaining you any winners right now?
Well, it's more of a process than a plan. The traders that are doing well are having multiple plans because every day you're trying to figure out which plan will the market follow. So you try not to have an opinion on it, you wait for the market to confirm it. But you need to have your process on, if the trade changes, you get out of the way. If,
Right.
if something looks good, be careful in a certain market environment, not adding to it. Like today, again, you made really easy money, like Tesla, for instance. You can even put up the chart of Tesla. I think I sent it over. This morning it was down 5. So Chillo on the alpha team is like, I'm buying it versus the low because it looked good. It was only down 3, showed relative strength. Went from down 5 to down 3 to only down 1. It was hovering there. I missed that trade. And I'm like, oh, Tesla looks like it's going to go green. So I actually played it from down $1 to up 50 cents. I made some money, but PS, the stock closed down $6 on the lows. So that was a 20-minute sequence for 20 minutes. And then it reversed. And if you would have said, hey, it was so strong the first 20 minutes, I'm going to buy it down $2, $4, $5, $6. PS, you lost a lot more than you made. So you have to follow like the type of trade that it is and what you're looking to make from it, and where it is on the active approach and the intermediate approach. And for now, for Tesla, I kind of think if you look at the chart of Tesla, the 200-day could be somewhere tomorrow. If you're watching this, could be an opportunity close to 223-ish, and then really you have a big level, going, which you can't see the chart that I have up, that's a little bit closer to 218. So I would think that it's getting close to an oversold spot for a real bounce, but it hasn't happened yet. So that's why you have to take trades.
So we know you're not very bullish about many things right now, but what stocks would you say you're bearish about at this point?
Right now, I'm not overall, I'm not like a screaming bear. I'm just, again, sequences. I trade active sequences, and right now we're not in a bullish active sequence. We're in an active bearish sequence that's gone on for 2-3 weeks. I don't know if it's going on 5 weeks or 8 weeks. Again, I'm not a bull or a bear. I'm trying to make trades. Right now the SPYs and the Qs are below the 8 and 21 day. Every time we've got a rally, we've been rejected into the 8 day, which is a bearish active sequence, which means take your risk down, try and short strength, and only be very selective buying dips. And if you do so, net your money until that changes. For most of 2023, we're above the 8 and 21 day, and every time we got extended from it, you would rally to it. So you might be able to cue shorts back to it, but that's when you want to be long. So now it's the reverse of that. If you don't, or if you're not really good at it, like I'm not great at shorting every bounce because I feel like at some point it's going to take out the level and squeeze me, then just sit and wait to truly see a signal on the relative strength and things acting better versus just a trade. So at this point, I'm not bearish on the market. I did say this year, I'm like, I don't think we can make a 52-week high in the S&P cash. My target was like 4,500 from 6 months ago. We went to 46 and change. So now I kind of map out levels versus targets. People like me to say what I'm thinking because I'm a strategist also, and I'm on Fox Business and Wall Street Journal, all these places, So that's why I did the summer top. So I would think, if I were to put out there, I don't think we get below 4,200 in the S&P into the fall, and that would be a good place to look for macro longs. I would also put a high probability that we probably hold 4,300. So 43 to 4,200 is an area that I think you put longer term money to work. And I still think that next year, at some point, potentially the S&P will make a new all-time high, if not the year after. So, so we're still range bound, where you have to be opportunistic, where you can't get too bullish, you can't get too bearish. But if you watch the 21 day on an active level, it'll tell you what the short-term direction is, which is how we make a living.
Hmm. Eddie wants to know what you think of PayPal. He said it's been the popular name retailers longed on for quite a while. Despite good valuation, the price action just keeps saying otherwise. What is your thought on $59 support?
First of all, I didn't say cheers to everybody. Happy summer. It is Wednesday, so I am drinking a White Claw. I had some traders come in to, to talk a little strategy. So, it's kind of like tomorrow. Usually we do like a little happy hour on a Thursday, so I don't get to see Greta all the time. So I want to have a beverage and say cheers to her for doing a great job, and cheers to you for tuning in. So now we'll get to PayPal. I felt like that was rude. That I say, what's it called? Happy summer. I don't know. PayPal is a broken name. Look at the gap down here. Gap down. I can't show you the chart right now. On August 2nd, if you look at your own chart, August 2nd is a huge gap down. It's been below the 200-day for I don't even know how long, for basically for a year and a half. So anything below the 200 days shows you no institutional support. So I don't care what Kramer says or this person says or that person says. Yes, you can make some tactical money, but it's a broken name, and now it's back to the lows of May. So I think it's an avoid. I wouldn't short it here, but it's a broken name, and I've seen these things go lower. So until it shows you really something, I'm sorry if you're stuck in it. I don't know what you said, but bottom line is that gap and go to the downside around 70, makes me think that it's an avoid, and it could see lower prices. Right now the S&P is only 4% off highs, and the Qs are maybe 7%, and PayPal is almost at 2023 lows. So that's relative weakness. That's an avoid in my trading book.
All right. So people always want to know how pros like yourself pick stocks to trade. Walk me through your process in the morning or beginning of the week, what you look at across the market to kind of pick the stocks you want to be playing that week.
Well, I have a go-to list of like 40 stocks. I write a note every day. I'm up at 6. I do my 6:30 club and my morning call at 8:15, but I'm up at 4:30 actually, reading a macro, watching what's happening overseas, seeing what market's leading what. I know what my stocks are doing. I know what the trend is. Typically, you want to start at the S&P. Is it above or below the 21-day? If it's above, you're looking for longs. If it's below, you're trying to be, in cash and risk lower, and maybe you want to try and short some things or test levels. So if you sold things when it broke the 21-day, you could test the 50-day test, the 100-day test, the 200-day, and see how things react. But really, based on where the S&P is and if it's above or below, tells me what do I want to look for longs or shorts. Some people are like, oh, I'm going to do sector rotation. There's a bear market here. There's a bull market there. Yes. Can you find a trade in energy? Could you find a trade in the IWMs? Can you find a trade in the XLF at times? Yes. I only trade those when they're perfect. Everyone's been talking about how, come June, the market broadened out, which it did. And there were spots to make money with the XLE, the IWM, and the XLF. But then those sectors, to me, when they're leading the market, I still have risk down because that's not the healthiest environment. The market usually when it's healthy is led by tech, led by semis, led by banks. And right now that's not the case. So I try and look at, what's acting well, what's above, what's showing relative strength, what do the chart patterns look like, what are the pivots, what could I be in a tier one, could I add to if it's working, where could it go? And I put those if-thens every single day. And I do it, I start my day at 4:30. By the time the market opens at 9:30, it's 5:30, 6:30, 7:30. I'm up for 5 hours before the market opens, preparing, getting my content out so everyone can ingest it and approach it with confidence. And it doesn't feel like 5 hours. It feels like, minutes.
Sorry, got lost in my notes here. Tell me about the best trade you've had over the past week and what made it go well.
The best trade over the last week.
And maybe it's not a big winner, but it's one that you got into, you followed your process, you followed your plan, you traded properly, even if maybe this, wasn't a huge profit.
As you said, have a great week. I'm trying to think my best trade. It is Wednesday. I did Monday. I had a good day. Monday, NVIDIA was lower. It was down $5. Morgan Stanley came out and said this is the time to buy.
Mm,
And then Nvidia did a red dog reversal.
right.
It's kind of like a double-edged sword because I bought it when it was red. It reclaimed. I think I look at it. I think the level is 406. If you look at the chart in the video, yeah, it was 406.39 from 480. And unfortunately, I didn't hold it and swing my last trailer because it went up a lot more. I made like $8 on it, made good money, and then I made money doing some other red dog reversals. But since it went green first, I probably should have stayed with it, and then it showed follow through the next day, which I didn't take. I took 5 other longs besides that one because I thought it was up too much. And meanwhile, that one worked, the other ones didn't. So it was a good trade with good execution that I took a little too early, and it's something I learned from. Whereas Monday was a really good day. It could have been a fantastic day if I would have just trailed it. Um, and then Tuesday turned into a day that was suffocating, but I followed my process, got out of the way. And if I would have closed my eyes and said, I'll come back on Wednesday's close, I would have lost 5 times the amount of money versus some paper cuts.
Hmm. And so on the flip side of that, tell me about the worst trade you've had over the past week and what made it go wrong.
What was my worst trade this week? I didn't really have any bad trades.
Hmm.
I just tried some things and they didn't work.
Hmm.
I didn't get that impulsive. Oh, you know what I got impulsive? AI. Okay.
Hmm.
So AI was a name that I traded pretty much since the start of the year and
Hmm.
made really good money in it. So many active sequences. Then on Monday, when the market actually had a good day, it reversed. Looked like it could get back to the 8 and 21 day. I didn't want to trade second, third, fourth tier names. I only wanted to be in. I was in Apple. I was in Amazon. I was in Google. I was in some, the leaders because that's what I want to be in when market's in a corrective phase and everyone's like, oh, what about AI? What about Unity? What about Rivian? What about this? What about that? Because there were names that we traded and did very well in the last stage of the rally. So I
Hmm.
went back to AI, and then on Tuesday it opened down a little bit. And it looked like it was going to go green, and I added a lot, and it just
Hmm.
failed and went down and changed. It was my biggest loser on the day. I managed everything else well, and I lost more there. And I didn't really want to be in the second, third tier name, but I went with it because I was kind of bullied from the alpha team that was like, "Hey, what about this?" I'm like, it made sense. It made sense, and I would do it again probably, but maybe I shouldn't have added to it as it went green to go through a high of the day when we're in a bearish corrective phase. So I lost more than I needed to. But I
Do
got
you
out of
op-
the. Sorry.
no, you don't. You're okay. Do you operate with a set stop loss, percentage dollar amount, or do you assess risk versus reward on each individual stock you're getting into?
It's more when the price changes. What
Okay.
should happen, what shouldn't happen.
Hmm.
So AI looked like it was going to go green. I went after it and it didn't really go up while other things went up. So that was like a red flag. Maybe you shouldn't have so much. So I got out of some. And then when it gave back more than half of the prior day, showing the prior day didn't have as much meaning, I just get out of it. Meanwhile, it's a lot lower from where that was. So it's really based on am I trading something for momentum? Am I trading something for follow through? Am I buying a dip? Am I buying something reversal level? What is my trade? And if the trade gets invalidated, I get out and follow my process. So it's all different. You can't count the money. That's a
Hmm.
sizing issue.
Right. So you mentioned you're going to Spain next week, and I would say a lot of traders have trouble taking time off. They get a lot of FOMO watching the market from, not watching the market from afar, but not being in it. So how do you deal with that? Do you completely not trade when you're on vacation, or do you do a little bit while you're gone?
Sometimes I take options, depending on where
Okay.
we are. Like if all of a sudden we sell down and we continue to sell down, the oscillator is minus 70, and we go on Friday, we're minus 90.
Hmm.
I would say, hey, I feel like I'm going away on a week and we're gonna get this oversold bounce. So what I would do is I would take some SPY calls, some Q calls, maybe something that's acting well, and say, hey, let me risk 10 grand to make 25. Let me risk
Hmm.
20 to make 45. But I wouldn't buy things because if we just continue to disintegrate, then all of a sudden you could risk 15, and you're losing 50. So I have to think to myself, what would I be upset that I missed that's not going to control my mental state of the week? For no man's land, I'm not missing a nickel or dime $1,000 trade. I'm
Hmm.
saying I'm missing some kind of move that I've been trying to catch, but it happens when I'm not there. So I have to figure a way to do it, where risk is defined, because I'm not going to be at my desk to micromanage it. So it has to be a little bit more bigger picture. And bigger picture can happen if all of a sudden, the Qs that went out, if you put the Qs daily chart on, the
Hmm.
Qs went out to 362. If the Qs, which I'm not saying is going to happen, but if all of a sudden gets down to 356, which is another big level, and I think it can get back to here, maybe I would say, hey, let me buy some options so I can make a little bit of money while I'm away, because it always feels good when you make a little bit of money away. But if you put too much on, it's going to control your emotions of your trip, then you're screwing up your vacation, and vacations are too far in between, and life is too short, so you want to make sure you really value the time you have with your family. So I'm not going to do too much, but sometimes if you don't put it on, it drives you more crazy than putting it on and not working, because if it doesn't work, then when you get back, there's another chance for whatever you thought could happen could work.
Hmm. All right, you're missing something big next week. Nvidia is reporting earnings next Wednesday, so we're getting toward the tail end of earnings season here, but still some big names like Nvidia coming up. How important is this earnings report after the absolute blowout performance we saw after the last earnings report?
Well, it's pretty important considering the whole AI craze, help tech. Question was like, was that report a one report wonder, or is the consistency of the demand there? So I think a lot of people are going to be looking very close to that. So the
Right.
question is, where is the stock when we report? We're close to those highs there. The
Hmm.
closer we are to those highs, the more price it's in. So it could be a solid report and still not go anywhere. It could be a blockbuster and gap up like it did, or it could be in line and then the stock gets
Yeah.
obliterated because of the valuation. So how it responds to that report is going to be very important. Is there a
Hmm.
trade there? Is there set up for a trader as of right now? If you could hang out in this 430 area, I would say if you
Hmm.
think it's going to get to 520 or 550, you could probably buy 480 calls. You could do like a 480 by 510 call spread and risk 5 to make 15 if you feel like that's going to happen. Or you could trade it after hours, gets above and stays above 480. It'll prove that stocks could still trade on their own merits, and it would probably help tech. But if
Hmm.
it's just like in line and they don't do what they did last quarter,
Hmm.
probably going to help the Bears fuel and get out of the way and give them a little bit of confidence that we could have a bit more of a faster downside coming into September.
Hmm. All right, so we've got 2 days left in this week of trading. Then you go on vacation Monday. So talk about your strategy heading into the end of this week and going into vacation.
Well, we'll see. Again, today the spies and the Qs closed at August lows. If we were to gap down tomorrow, I'll probably trade it from the long side like I did today. You can make money even if we head lower.
Hmm.
If we get really drastically oversold the next 2 days, I'll go out and maybe buy some calls for an oversold bounce for the following Friday, because I'll be away, and do it in a way that I feel like whatever I want to risk, I'll know my defined, risk.
Hmm.
If we were to rally Thursday, Friday back to a level and blow off the oversold level, or burn it off, whatever, not blow it off, burn it off, I'd probably
Hmm.
just do a whole lot of nothing, because we'll be in a range, and the range to me is, you know, you can nickel and dime it if you're at your computer, but if you're not at your computer, there's no need. You might as well, enjoy yourself and take your time and come back and figure out what's next in the market, post vacation.
Hmm. A lot of traders get caught up in indicators. There's so many different indicators out there that you can put on your chart, you can use to find, you know, trades to make and define trends, etc. What are your top three indicators that you use on a daily basis?
Well, I use the moving averages, like I said. Are we above or below the 8 and 21 day? If we're above,
Hmm.
there's momentum, actively long, portfolio approach. If we're below, it's a little weaker. You're tactical, you're being less long, you're looking for shorts, you're doing less. That's something. I looked at the oscillator when it gets to extremes. Right now, the oscillator is -70. It starts getting oversold at -40.
Hmm.
So if you started shorting or start buying at -40, it's still at -70. It's not an absolute. It's just a coincidental indicator. And bottom line is, you probably lost money trying to buy, because sometimes we bounce at -40, but I've seen it at -118. So it's starting to get extreme. So that's a coincidental indicator that might line up with a moving average. And if the oversold nature with the moving average, whether it's the 200-day or the 100-day line up, gives me a little bit of clues on to, put on a trade bigger than perhaps normal or not.
Mm-hmm.
Some people use volume gaps. Some people use, weighted average VWAP. I use the VWAP during the day. I don't.
Mm-hmm.
Sometimes I look at the weekly just to see if we're coming into levels. I'll look at weekly charts if we're breaking levels on the daily charts. But I tend to be really my definition of myself is I call myself a cocktail napkin technician. I don't look at 1,000 indicators because those who look for all those indicators are looking not to put on a trade. If we're in a
Mm-hmm.
strong trend and futures go lower and stocks hold in there, I want to buy them, they go up. If we're in a weak trend and things bounce and they don't bounce, chances are you shouldn't be long, you should be short. Either stocks are good or stocks are bad. That's what a lot of big traders have told me or taught me. Yes, it's good to map out areas and know where things can go both which ways, but in the moment, it's like, are things showing good price action or bad price action, or choppy price action? So, that's and then the most important thing is to know your time frame. Are you trading an account that you get paid on monthly or quarterly, or are you positioning for the next 10, 20, 30 years so you could retire or pay for college? Those are important
Right.
things you have to identify.
Hmm. All right. So you called the summer top back on. You said it was July 19th. What would you say might be the next big catalyst for the market?
I think you would get through September, right?
Mm-hmm.
They don't raise rates again. See where the market is. I guess Jackson Hole is going to be a catalyst. That's happening soon, where he's going to talk his thing. I think everyone knows they're closer to being over than not. It's just a question of,
Mm-hmm.
can the economy handle higher rates for longer, and will things slow down with this elevated PE, and then will the mechanics of the market start to, you know, play out where it can go lower. Like right now, the reason why we rallied so hard is because everyone thought we were going to a recession. Everyone thought we were going lower. So nobody was long, and everyone had get, we weren't as bad as people thought, and shorts got squeezed, and then there was some positive news, and markets trended. Now we're more
Mm-hmm.
neutral. So
Right.
the question is, calendar is a little bit of a catalyst. Um, Obviously, data is going to be a little bit of a catalyst. Right now,
Mm-hmm.
it feels like inflation poked its head above. We've been declining. Now it poked up a little bit in the last month. With gas was 3.25. Now it's 3.60.
Yeah.
Gas goes below 3. That's helpful.
Yeah.
So
That's
there's
nice.
a lot of things to look at. It's just not one. You know.
Right.
So at this point, you have to take the formula. You have to take the funnel and into a spot, and then figure out how you want to trade wherever we are at that moment. And right now, we pulled in, a little slight correction.
Mm-hmm.
It's been very orderly. It hasn't been extreme. It hasn't been fast and furious. It hasn't been any kind of real fear. So maybe that could happen into September, October, and get us a better spot that we could measure our risk and define it. But there's also a lot of people making money short. I don't want to discount it. Like guys who've been waiting to be short, they're selling rallies, they're making money, and they're making fun of me a little bit. Oh, Redler, you're out of your risk positions, but you should be shorting this, you should be shorting that. I'm like, I'm fine just relaxing.
Mm-hmm.
I made my money in the second quarter and in July. I've given some money back. I'm biding my time. I don't need to be so active on both sides of the market. You need to know what you're good at.
Right.
Granted, you want to work on some things. And when there's a trade to the short side and we break a level, I like the fast money to the downside too, but it doesn't mean I have to be as active in that. I could just wait and not get hurt during a certain spot, and then be able to find that spot and be thinking clearly when that spot shows itself.
Daniel asked how you decide your options expiration date when you buy stocks for a binary event.
Well, it depends when the binary event is. If the binary event's on Wednesday, I'll buy options for that Friday. I
Mm-hmm.
usually love when stocks report earnings on a Thursday. Then
Mm-hmm.
you're not paying too much time value, and you don't have to wait too long. You buy options for a Friday. If it works, it works. If it doesn't, it doesn't. If you have a FDA approval or you have data coming out, you know your event. If a
Mm-hmm.
chart's just looking good, and you're like not sure when it's going to trigger, maybe you got to give yourself a few weeks because you don't know. There's no binary event. It's just a good looking chart. You're not sure what day it's going to break out, and you want to make sure you have exposure, and you don't want to
Mhm.
get chopped around if it's not the day you think it's going to be or the time of day.
Rod asked, what is your percentage of trades in individual stocks versus trades in indices?
It depends. Depends on what kind of sequence we're in. When we're in a corrective sequence and I want liquidity, I tend to trade the Qs and the SPYs more. When we're
Mm-hmm.
uptrending and stocks are outperforming and then short patterns are setting up, I'll be in 10, 12, 15, 20 names and sometimes use the indices as a hedge depending on where we are and if we're extended from the moving averages to be able to manage everything. Where if we open down, I could cover a hedge, I could add to longs, and things go green, I could sell the longs, I could add to my hedge. So it all depends right now. Like right now, I'm focusing and I'm just I've been day trading the SPYs and the Qs a little bit more than stocks
Mm-hmm.
because I'm trying to pick a little bit of a spot whether or not it can hold or not versus. But if a stock shows crazy relative strength while the indices are going lower, you're better off going with that stock because once the indices bounce, that stock that showed relative strength will be the one that outperforms.
Hmm. You've been trading for over 25 years at this point, yes?
They're aging me, yes. I've
No,
been a chief
makes you
operator. I watched the
your
SEAL team.
experience. You're an
For those that want to
experienced
show
trader.
this, you should watch the SEAL team. Have you watched the SEAL team? It's a good show. It's on Amazon Prime about tier
Mm,
one operators. They're the ones that the Marines that are in the trenches.
mm,
And yes, I feel like a tier one operator. I've seen a lot. I've been through a lot. I have some scars. I work on myself every day. So do these guys. And I've been doing it since 1997. Sometimes, it feels easy. Sometimes I do things that are just fluent and without thinking of people like, how did you see that or know that? How'd you get that feel? You develop it with seat time. Rome
yep.
wasn't built in a day. If you want to be a lawyer, you got to go to college, you got to go to law school, you got to do whatever. It's 9 years before you can be a real lawyer or a doctor. It takes time to really develop your feel and your process. And I still work on it every day. And I listen to videos and I listen to podcasts and I try and work mentally on my decision making and feeling in the moment and process things. So it's not easy, but it can be done.
Mm-hmm.
Definitely
Yeah.
be done what you want it. You know, they say the universe knows if you make a declaration of what you want to do and you put the time in, the universe gives it to you. But if you go half fast, you're not going to get rewarded for anything you're doing and anything you're doing in life. So
Mm,
make the commitment, put the time in, and you should get rewarded no matter what stage of your trading career you're in.
hmm. Last call for questions for our audience members. We have one more from Darren. He asked if you see any value in buying in the money options to be a little more conservative.
Yeah, you could buy in the money options. You're just risking more if you're wrong.
Mm,
If you buy out of the money options, it costs a little less, but you need a bigger move. You're in the money options. I like to buy in the money options when I feel like a move's about to happen, and then the price action goes, and then I create a call spread based on the movement triggering, and then I sell a strike higher out of the money, and then that's probably usually the same price as the in the money, and then I get a free play. That doesn't happen
mm,
always, but that's good when that happens. I tend to say if you're in the money, you might as well be in the stock and put a stop in. You should go a
mm,
little bit higher, it costs a little less. And if you want to, put less out there, just make it a call spread or a put spread.
mm. How would you say your trading has changed from Scott Redler in 1997 to Scott Redler in 2023?
First of all, I would have had like four of these. I've only had one. So that's not the trading end of it. That's the mentality end of it. It's just different. You start off as a day trader, then you want to go day trading overnight, and then you want to do day trading overnight and options, and you want to do day trading overnight, computerized trading. And then it just, again, like I just said before, Rome wasn't built in a day. I've been
Mm-hmm.
doing this for such a long time that I treat myself as a portfolio manager. I have an active account, a swing account, a box account that makes my trades bigger on the long side and the short side. I have an option account that I play for binary events. So it's 4 accounts, 4 that I get paid on quarterly if I'm right. And then I have my 401k, my 403b, my 529. I didn't have all these things in 1997. I've built
Mm-hmm.
them through the years. So what I will say to you is if you're, whatever age you are, sacrifice a little bit short term to make more long term. When I was 35 years old and I bought my whole life insurance policy because my best friend went into the business and he said, "Oh, you need $1 million whole life insurance policy." I'm like, "Well, it's $14.50 a month." He's like, "Suck it up." P.S. It's 15 years later. It's got a nice
Mm-hmm.
cash value. My family gets X amount, and I could borrow from it. And when I'm 65 or 7, it's gonna be a lot of money. Same thing with the 401k. If you're working for a company, and you're trying to trade on the side, and they want to
Uh-huh.
match you with a 401k, then
Mm-hmm.
sacrifice a dinner, live in a less apartment, because if you do that for 30 years, it's going to add up. So sacrificing short term will help you long term, and hopefully you get that long term because not everybody gets it. So that's why you can't sweat the small stuff in the intermediate term.
Mm-hmm. All right. We are at an hour, so thank you so much for being with me today, Scott. Another really great discussion as always. I hope you enjoy your vacation next week in Spain. Hope it's not too hot. I know it's really hot over there in Europe this summer. For everyone joining us, I'm posting a link now in the chat for our next event next Wednesday, same time, 4:30 p.m. Eastern. So go ahead and register for that now. And again, Scott, thanks for joining me today.
Greta did a great job. Thanks for having me. Looking forward to the next time.
Have a great night.
You too.